Hello and welcome to the look ahead for Thursday, the 27th of February with me, Fiona Cincotta, Senior Market Analyst at City Index. So in the European session, we'll be watching for Eurozone economic sentiment as well as the release of the minutes from the January ECB meeting. In the US session, we've got US Q4 GDP, initial jobless claims, as well as durable goods orders. Earnings we're watching for tomorrow in the US, Dell and HPQ. In the UK, we'll be watching out for Rolls-Royce. So I guess the first thing to be talking about is actually what's going to be going on as far as US economic data is concerned. There have obviously been some concerns over after a recent slew of weaker than expected US economic prints. So we've had consumer confidence this week was significantly weaker than expected, dropping to a 4-year low. We've also had last week Michigan sentiment was also down at a 17-month low, and the services PMI was also at a 15-month low. So a lot of weakness starting to appear in the US economy amid concerns over the Trump administration and what sort of tariff policies might mean for the inflation outlook as well as the economic outlook. So with that in mind, let's just take a look at the US dollar Japanese yen chart that I've got up here. Just as far as the data is concerned, we're expecting GDP to come in at 2.3% annualized. We're also expecting durable goods for January to be relatively strong, actually at 2% after falling in December. Also, jobless claims are expected to rise slightly to 221, up from 219. So if we get sort of signs of weakness in these data points, that's obviously going to unnerve the market. I'm not sure that they'll necessarily see it in the GDP data. Obviously, this was Q4 last year. So we know that the US economy was relatively holding up relatively well then. It's more sort of more recent data where we've seen softer figures coming through. So jobless claims is an area to be watching out for potential weakness. Now, obviously, this is the US dollar Japanese yen chart that we're looking at here. If we're seeing weakness in any of these figures, then that could see a continued decline in the US dollar and a continued strengthening in the Japanese yen. Also worth bearing in mind that obviously the yen is performing pretty well at the moment. I'm on expectations that the Bank of Japan will continue to hike rates. We do have Tokyo inflation data, which is due out on Friday, which will also be watched quite closely. But in the meantime, with the US data set to be released tomorrow, we've got a fairly significant point that we're at here. Sort of we tested those lows there around the 148.70. That was also the low that we saw back in December at the end of last year. Now, if we get some weak data, maybe we'll see a break below that level, and also the fib level here of 148. I think that's right. Yeah, around 148. So if we get a break below there, then actually that could spark a deeper sell-off towards the 144.90, 145 levels. If we get stronger than expected data, that actually might help to calm some worries as far as the outlook for the US economy is concerned. On the upside, be watching the 150 round number, and also the 150.78, which is the 50% fib retracement from the 162 high to the 139.50 low. Above there, we've got the 200 SMA that's coming into play as well. Just whilst we're talking about sort of what's going on in the US and that slight weakness of data that we've seen, also worth taking a look at the S&P 500, which is here. Obviously, this recording is happening before the release of NVIDIA's results, which are out after the close, and have the potential to impact the broader market and broader sentiment, given that it's sort of the AI darling of Wall Street, but as we know, has had a little bit of a problem since the DeepSeek announcement. So, you know, those numbers are going to be watched very closely to see whether the big customers of NVIDIA are still buying into the chips. So this is what we're still spending as heavily as they were previously, but this is the S&P 500. So as I said, we might see it change a little bit before we get to tomorrow, given these results that are expected overnight and could move the futures markets. But on the upside, we're seeing a recovery today after this fall off yesterday, which again was as a result of those concerns over the outlook for the US economy, particularly when sort of combined with expectations that Trump is going to be implementing, or he said he will implement 25% trade tariffs on Mexico and Canada by the end by next Monday. But for the time being, if we do get weaker data that raises concerns over the outlook for the US economy, then just be watching out. This is the 100 SMA at 59.60, which actually has just sort of been a key support. We saw the price recover yesterday to close back above that level. We've seen it recovering again today. And if that recovery does continue, if we get sort of upbeat results from Nvidia and the data comes in as expected, then maybe we could see a rise above the 6,000 there, which is also the 50 SMA. That's going to open the door to 61,000 and 61,500 fresh all-time highs. But just on the downside, this is the level to be watching out for. It's the 59.15.20 zone. Okay, so we've seen a couple of tests now over the past few weeks of this level. So if we get a break below there, that will create a lower low, and that's going to bring in the 57.80, which is the low that we saw from January. It's the 2025 low. Other things to be watching tomorrow, as I said, we've got Eurozone data. We're expecting to see economic sentiment improve slightly to 96, up from 95.2. Interestingly, I mean, the data that we've been seeing from Germany this week hasn't been that encouraging. We've seen a contraction in Q4 GDP. We've seen consumer sentiment weaker than expected. And even so, we've still seen the euro giving it a good go, but it can't so far manage to break above the 105.30. That's the level that we're going to be watching out for. So if we get any weakness in the US dollar on the back of this data and any strength, we've also got ECB minutes to be released tomorrow. They could feel a little bit stale, given that the ECB will meet again next week and is expected to cut rates again next week. But so, I mean, that's all sort of particularly expected. There'll be no surprise, I don't think, on that level. So if we do see US dollar weakness, this is the level to be watching, 105.30. It's also just below the 100 SMA there. If we get a rise above that, it's going to extend the gains potentially towards the 106 level. On the downside, a couple of minor supports there at 104.50, and then you've got this one here, 104, which is also just above the 50 SMA, which is at 103.90. So that could be an area of support to watch on the downside. But the recovery is still on track from the 102 February low. Just got to get above 105.30 to be able to extend that. Momentum is supporting it with the RSI above 50. Then just finally, also, we've looked quite a lot at the DAX this week, but it is worth still keeping an eye on there, particularly as we've got euro stocks are trading at a fresh record high again. So we've seen a recovery here from the rising trend line support. Obviously, if we get stronger than expected data, that could be beneficial to the DAX. DAX also weighing up, has had a good run up on optimism surrounding the ECB, which is expected to continue cutting interest rates, which is supporting German stocks. And it doesn't seem to have too much of an impact, those threats from Trump over trade tariffs for the Eurozone. I think there seems to be a sense that maybe these are negotiation tactics, so it hasn't really stopped the market from rising towards a record high. So, I mean, the RSI is back over overbought territory. Whilst it remains out of overbought territory, it supports further gains. We're looking on the upside for a rise above to 23,000 for fresh gains. On the downside, just watching this level here, which is the 22,180, 22,100. That was this week's low and last week's low, which could provide a little bit of support. If we get a break below that, that obviously will create, at least near term, a lower low, bringing in 21,500 into focus. So that is everything from me. Thank you very much for watching. And if you like the video, then please do give the video a like.